Hello there, traders. Hello, fellow champions. Welcome to another video of Trading for a Living Forex Champion series. So, I know it's been a while since I posted a new video. However, for today, I will be teaching you one of the best beginner's strategy called RSI Divergence. So, RSI stands for Relative Strength Index. And I'll be teaching you as well how you can incorporate this in your trading to have a better entry, how to catch the reversal of the market, and be a better trader overall. So again, this is just a beginner's strategy. So if someone is asking you to pay for this kind of stuff, guys, you don't have to pay for this. I'm already teaching this for free. So all you have to do is learn this strategy and incorporate this in your trading. All right. Without further ado, let's get straight to the charts. All right, guys. But before that, I'm only promoting what I know is the best. So if you want to trade with the best broker, trade with USG FX. All right. Be smart, be informed, be with USG FX. All right. So today's video, it's all about what? Using what? Trading indicators. So again, guys, I'm not an avid fan of indicators, but then again, I've been receiving a lot of messages on how to use RSI or specifically RSI divergence in general, right, as a strategy. So again, for those who are an avid fan of using indicators, this one is one of the best when it comes to catching the reversal of the market. All right, guys. So this strategy is for the beginners, right? So you don't have to pay for this kind of strategy. You can just find this in Google, in the web, in any YouTube channel. However, I'll be teaching this and explaining this as well in a more detailed way on how to approach the market using this strategy. All right. So divergence cheat sheet. All right. I don't know if this is readily available in the internet, so you don't have to pay for this kind of stuff. All right. So relative strength index or RSI, of course, the default settings in your trading platform or in trading view is just a default for 14-day period. All right. Just quick facts. Regular divergence is basically for the reversal. On the other hand, hidden divergence is for the trend continuation. So this will be the setup for what? The bearish regular divergence, and this will be the setup for bullish regular divergence. So for today's video, I will be focusing more on the regular divergence. All right. So how does it work? Right? How does this strategy works? Uh, Again, this is just a beginner's strategy, so you don't have to pay someone to teach you this. That's why I'm giving this for free, teaching you guys for free to incorporate this or in order to help you in your trading. All right. So one additional information is that when using a relative strength index or RSI as an indicator, right? So there are two zones, right? There is the oversold zone, which is 30% and below, and there is also the overbought zone, which is the 70% and above zone. All right. So whenever the price reaches this 30% and below, we can call this as an oversold market. All right. On the other hand, when the price reaches the 70% and above zone, we know that the market is already at the overbought zone. So just another information, overbought or oversold zone doesn't indicate a trend reversal right away. So I will be showing you why you cannot just rely on the RSI as a reversal. So you have to know the structure as well, because that doesn't mean that if there's a divergence form, the reversal will happen right away. So it doesn't work that way. It might happen every once in a while. However, you might be caught up with what, a strong move on the opposite way, because you are not probably checking the market structure as a whole, all right, or the bigger picture. So you have to be careful in using RSI divergence as a strategy, all right. So uh just a basic concept when it comes to the bullish regular divergence. So this is one example, right? So when the price creates what, a lower low, right, from a low and then lower low. However, if the RSI, or this relative strength indicator, created a higher low, that represents what, a bullish regular divergence, right? So notice the chart formed lower low while the RSI formed what, a higher low. So which means that the market's momentum is going now towards the upside. All right, so that is an example of bullish divergence. All right, so if there is a bullish regular divergence, there is a bearish regular what, divergence. All right, so for the regular bearish divergence, notice how the chart formed a higher high, and then while the RSI formed what, a lower high. So meaning that the price momentum will be going towards the downside, or the market is shifting now from a bullish to what, a bearish market. So that is simply how you can identify divergence on the price chart, and how you can what, uh, catch the reversal of the market. But there's a catch, as I've said. All right, if the market or overbought oversold zone doesn't indicate a trend reversal right away, which means even if there is what, a regular divergence, that doesn't mean that the market will reverse right away. So most of the time, it will not happen in an instant. You have to know the structure of the market prior for your entry. All right. So always check the higher time frame for the market structure and the overall what, movement of the price prior to what, using this strategy. So you have to have a multiple confluences when it comes to using divergence, right? So this is just basically how you can spot divergence, and knowing that the market's momentum will shift, example, from a downtrend going to an uptrend. So on the contrary as well, from a bullish market shifting its momentum towards the bearish market. So let's get straight into the charts, and I'll be showing you some examples and how you can approach the market using this RSI divergence strategy. All right. So let's go to our actual charts. All right. So what do we have here? So currently we are now at GBP CAD. So but before that, again, since majority of you are using, I guess if you're a beginner, definitely you're fond of using indicators. So basically, you can just type in your trading platform, or this, if you're using this charting platform called TradingView, you can just type relative, and there it comes. It will automatically pop up. So this is an RSI default 14-day period setting. All right, so I'll just show you the settings. Just basic 14 days period close as a source, right? So I'll just change this color for you guys. uh Change it to blue. Not really, so black is better, right? So just change the thickness, so we can easily identify divergence. All right, so we should what spot what bullish divergence. So I saw one example. All right, now I'll be teaching you how to train your eyes, or just a pattern recognition on how to identify divergence in general. Right, so just a random back testing. So you can see here that the price created what a lo lower low, right? From a low, then lower low. So please observe the RSI divergence, or the RSI itself. So what does it form? It formed what a higher low, right? You see this difference. So if the price created a lower low, however, if the RSI formed what a higher low, and then the RSI is already at the 30% or below, 30% or below of the overall RSI setting of 14 days, we can say that the market's momentum is already shifting to what? The upside. All right. From the downside, you can see here going down, and then we expect the market now to what? Go up. So you see, from a lower low, however, the RSI formed a higher low, which means the market's momentum is shifting now to the upside. Down, then going up. You see this? Alright. So, again, before you place a trade, always have a candlestick formation using this strategy. Alright. So, we can see here that the market created a what? A what? A buying pressure candle, right? It's a buying pressure candle, right? See here, this candle. So definitely, if you saw this formation, and then you saw that the market created a higher low, now the market shifts its momentum towards the upside, right? So you can place your trade probably after this pin bar structure below. Stop loss is structured below this pin bar, right? TP, of course, set your take profit on the next structure going here. Right? So that would be 1 to 3, not bad. Alright. So basically, just a simple regular divergence, you can easily trade this strategy. However, with confluence on the candlestick formation. Alright. Of course, considering what? Market structure. Alright. See here that the divergence was formed on a strong what? Strong support, right? Strong support level, right? So you always have to consider first the level prior to placing a trade using this strategy, right? So normally divergence is used to catch the reversal of the market, right? Because the momentum is now from the what? The oversold going to the overbought zone. Again, from your 30% and below, meaning the price now is ready to shift its momentum towards the upside. But that is not always the case. For example, you can see here, that is one example, that's one of the basic how you can spot divergence, alright, and how you can capitalize on this basic beginner's strategy, alright. So again, don't be caught up with just using the divergence as your entry, alright, for the reversal. You can see here, the market formed what? A lower low, correct? The divergence, or the RSI, sorry, formed what? A higher low. However, you can see that the price didn't reverse right away. That's what I'm saying. So that doesn't mean that if you saw a divergence, uh, expect that the market will not reverse right away. Alright, guys? You have to be careful in doing your entries when it comes to this strategy. Normally, people using this strategy, guys, what I do is normally I use this for scalping. Alright, you can also use this for intraday trading or even swing trading. However, for scalping, alright, what I do is whenever I place a trade like this, long position, example, next market, oh sorry, right, just example, alright. So normally, guys, when I do divergence strategy, I don't use stop loss, alright. This is a very risky strategy. However, guys, only do this when you have enough capital in your trading account, right? So normally I don't use stop loss when I'm using divergence strategy. So if ever I saw what I saw a divergence, regular divergence, I place a what I place here a trade, all right. And then if I know the market will not reverse right away, I then again, because you see here, uh, this is a cycle, you know. Normally it takes 3 moves downward or 3 moves upward depending on the reversal. It's a 3 cycle method for the real divergence reversal of the market. Alright. So normally if you saw this, you place your trade. Again, this is very risky. If you don't have a big capital, I'm not advising you to do this strategy using no stop loss method. Again, I'm an advocate of using stop loss because I always tell my students to always reserve your capital and protect your capital. Since I don't use this strategy anymore, however, for the sake of those beginners, I'm teaching you how you can use it and what is the downside of this strategy. So again, you have to be knowledgeable in everything that you do. So I'm also teaching you what is the downside of this strategy and what is the risk. All right. So normally when I do RSI divergence strategy, I don't use stop loss. Right. So this is my first trade. Right. Then my second trade, again, after this trade, I realized that it is not yet the reversal move of the market. So what I do is I place again another trade here. For example, I saw a divergence. So when I saw this another leg, another higher low, I know that the market is not. I know the market at this first cycle, that is not the first reversal. So this second cycle most probably will be the reversal. So it might be on the third cycle, but then again, my point is that's why I don't use stop loss. Instead of me be taken out of the trade, I'm adding more positions. So right here, for example, I saw another higher uh, higher low, correct? First one, all right. I will just put some label. One first cycle of the divergence, and then this can probably the second cycle, right? This, right? I'm placing my trade again here. Same example. This is a TP. Second cycle. Again, I realized, oh, it's not yet the reversal. And then I place again another, Another trade here without stop loss. Alright? That's why I'm advising you guys not to use this strategy if you're a big, if you don't have that enough money on your capital because you don't know how deep the market will go down depending on the price structure. right? So example here, I have 3 trades. So, but I know the market will go up. Why? Because the RSI is forming a higher low all throughout, while the price creates a what? A lower low. So this will be my setup for this uh, trade, just to catch what? This reversal of the market. Alright, so you see the point. That's why I don't use stop loss, because once I saw this divergence in the first cycle, I know the price now is ready to shift its momentum towards the upside from the bearish movement of the market. But we don't know yet when will it reverse, right? So what I do is, instead of me be taken out every time I place a trade, I don't use stop loss. As long as I have enough capital in my trading account, I don't use stop loss, and then keep adding position just to catch this move the market. Because of course, when you have divergence, definitely the market is now shifting its momentum on the opposite side. So that's why it is used to catch the reversal of the market. So, but this guys is very risky, guys. Don't use this strategy if you don't have enough capital in your trading account. So what I also do is, I place example one lot here, and then if I still don't catch on the first cycle, I place what? Another, for example, 1.5 lot, and then the rest 2 lots. So while I add positions, I also add bump up my what? My lot size, because once I caught this big move, definitely the drawdown from the first cycle and second cycle will be covered up with my wins on the third position, because I have what? A higher lot size position at the last or third cycle of this reversal, right? So that's the downside of this strategy if you don't know what you're doing. So we can still have a workaround on this strategy without using this no stop loss. So I will be showing you different ways on how to approach the market using this RSI divergence strategy. So the first one, as I've said, regular divergence, you can just place your trade and then what? Look for the candlestick formation. So on the other hand, if you're lazy or if you don't want to wait, as long as you saw a divergence creation, like for this lower low and then higher low, right? First cycle, second cycle, third cycle, don't use stop loss. Keep adding position and wait for the market to reverse. Definitely your losses or drawdown from this position will be covered up with this move of the market. So I have one lot size here, 1.5, and then 2 lots. All right, so depending on your risk. All right, but then again, if you have enough capital, you can use this strategy, but always manage your risk and know your limits when it comes to your capital. If you definitely you have a small capital, it is very risky to use this divergence strategy just to catch this bigger move of the market, right? So one workaround is, of course, check the market structure. For example, go to a higher time frame. You can see here that the market has this strong what? See, is a strong level of what? Our resistance before that was broken and now becomes new support, right? So this is a strong level or key level of structure. So definitely, if I would want to apply divergence, I would wait for the market to react at this level. Even though, right? So you see the point? Uh, should be here. Sorry. Yeah, correct. Oops. The point is, you have to know the structure prior to applying RSI divergence. Alright? So, you cannot just use blindly RSI divergence without knowing where you are at the level or key level structure. right? So back to the 1 hour, right? So if I know that this is my key level structure in the first place, even though this, uh, even though there is a divergence formed at this first cycle or second cycle, definitely I would enter my trade at the third cycle, right? Why? Because I know this is a key level. This green zone is a key level structure. So I know this is a high probability trade for me to catch the reversal of the market. Not on the cycle 1, not on the cycle 2, but on the third cycle. So so that's one of the best ways on how to trade divergence. Always make sure that the price would react to your key level structure marked on your higher time frame, right? Because there will be divergence initially at the first and second cycles, but that is not the true reversal. It will be normally on the third, but how deep it is, we don't know. The price might probably reach almost half of the zone prior going up, but the point is you have to be on the key level structure. Same as with this first example, right? We have a candlestick formation as a buying pressure and we are at a strong key level of support. So definitely when a divergence is formed in this level, you can catch the reversal of the market. So, but most of the time, if I want to be lazy and use no stop loss strategy and just keep adding or scaling in my position, I can still catch the bigger move of the market. Why? Because I have enough capital in my trading account. So I can have this hold my trade for a period of time prior the market to move to its intended direction going up for this example. All right. So let's have more example on this divergence. Right. So you see the point. There's no perfect strategy. It is how you incorporate this strategy in your trading. So there's no perfect system. However, it can help you, but as long as you know what you are doing and always know where you are at the level, always be at the key level structure prior to using this divergence strategy. All right. So let's check more examples for you guys. That is one example. Like for this one is a bullish divergence. All right, forming a lower low and then higher low. So what else? Let's check if there is a bearish. Oh, you see this? The market formed what? A higher high. However, the market RSI formed what? On a higher low, which means the market's momentum will now shift from a bullish market going to a bearish market. Plus, you know that the RSI level is at 70% and above. So meaning the market's now momentum is going to the downside. Right? See this formation, higher high and then higher low. Right? But one thing, just to make sure that you're not trading blindly, always check key level of structure. So we can see here that there is a key level structure here. That is why this is a higher probability trade for you to make a short position, right? Mixing it up with your divergence strategy. So I can say that I can use this strategy as a confluence if I'm at a key level structure as well as there is a There's also a candlestick formation for a selling pressure candle. So this is a selling pressure candle, correct? This is a selling pressure candle, right? You see these wicks, these rejections. That indicates that the sellers are coming in, taking over for the market to go down. So the market definitely went down after the formation of of this RSI bearish regular divergence. So from a higher high, the market price formed a higher high at a strong resistance level, and then the RSI formed a higher low, which means now the momentum is going where? Going down. Coming from what structure? From up. So You can use this strategy, RSI Divergence, as long as you are at a key level structure of resistance, right, for this bearish movement reversal, right? So you see how powerful divergence is. That's why it is ideal for those beginners. However, always make sure you have confluences when it comes to using this strategy. So you can use this no stop loss as well. So you have plenty of workarounds when using this strategy, right? As long as you know what you're doing, definitely you can be profitable in this strategy. So this is a reversal uh, strategy for those who want to catch the bigger move of the market. All right, as long as you have uh, as long as you train your eyes to recognize this uh, these formations, this opposite market formation, and then the RSI formation, definitely you can capitalize on this market for the reversal. So I guess a lot of you guys are using this method, but then again, if someone is asking you to pay for this kind of stuff, you don't have to pay for this. This is a beginner's strategy. So you don't have to fall for that. All right, guys. That's why I'm already teaching you what are the workarounds in this RSI divergence strategy. All right. So you have the first one, just the basic, and then the no stop loss, and then the third cycle move. As long as you have the third cycle divergence, you can place your entry right away for the bigger move of the market. You see, you managed to place 3 trades without stop loss. Definitely, you can cover up your drawdowns from your first and second position. All right, bumping up your what lot sizes. All right, guys. So a very risky way of doing RSI divergence. However, you can be profitable and catch a bigger of the market. So that will help you as well on what 10xing your what your capital. So, but one of the best strategy to use this, best ways, sorry, to use this is of course trading at the key level structure, having a candlestick formation for either a buying or selling pressure, and incorporating divergence. So you can catch this big move of the market. Definitely, if I have caught this trade just using divergence and key level structure, I could have profited how much? Short position after this candle, stop loss just above structure, take profit, next structure, probably here, right? This key level, right? So that would be 1 is to 1 is to 6 or 1 is to 7 roughly risk to reward ratio. Damn, that would be a huge what gain for you guys just using divergence and structure, right? So that is how you approach the market using RSI divergence. It has some flaws. However, if you use it properly, you can definitely catch the reversal of what? The market, right? This big move of the market, you can catch this using the best what method, using structure and candlestick formation, or this no stop loss method. Alright, this first, second, third cycle of the divergence. Alright, so that is how I use or incorporate RSI in my trading when I was just starting. But then again, you can be profitable using this strategy. Just make sure that you follow where you are at the market structure. Am I at the key levels resistance or am I at the key level support? Right? You have to ask this question first on yourself prior to entering a trade using this strategy. All right. So that will be it. So I hope you have learned something for this video, for this trading for a living episode. All right. So that is how you approach the market using RSI divergence. Definitely, you can catch the reversal of the market using this method. I have shown you uh, just the normal method, the no stop loss method, and the structure method. Alright, so just mix it up. Definitely, you can backtest this method. But then again, I'm not saying this is a perfect system. This is just a beginner's strategy to catch the reversal of the market, to catch the shifting of its momentum, and incorporating an indicator for you to decide whether you will take the trade or not. Alright, guys, so I hope you have learned something, and I would like just to give a big shout out to my VIP students, to my non-private members or private members at the TFP Champion private group. So thank you to all your support and to all those who will support in the future. Again, you may want to subscribe to this channel. If you're still new to this channel, you may want to subscribe. Hit that notification bell button so you are updated every time I posted a new video. So, but then again, uh, always practice risk management and always preserve your capital. All right, so that's it for today, and thank you. See you at the next episode.